We are well into 2023 and people are still talking about the impending real estate crash. Do you think the market is going to crash this year? Let's take a deeper look at it. Marcia Melendez here, your friendly Brooklyn realtor. By the way, if you find the content of my videos valuable, please take a moment and hit the subscribe button and also share the content with your family and friends who may need to hear this info. First, before I begin, I want to give you a quote from a master. The number one reason people fail in life is because they listen to their family and friends. With that quote in mind from a master, Napoleon Hill, I want us to look at what the experts are saying rather than our family and friends about what to expect this year in our real estate market. Here we have mortgage rate projections for 2023 from 4 of the top players in the market. Freddie Mac, Fannie Mae, which are national mortgage providers, MBA, Mortgage Bankers Association, you know they know a thing or two about mortgage rates, and NAR, National Association of Realtors, which compiles and tabulates all real estate transactions across the country. The average of all 4 organizations is coming up to where we will see mortgage rates ending below the current 7% that we are now, somewhere in the 6% range. We don't know, we don't have a crystal ball, but we do think based on these projections that the rates will end up below 7% by the end of the year. The 2 things that people are primarily concerned with are mortgage rates and the prices of homes. So 2023 is going to be another up and down and yes, sideways market. The recession seems to be cooling, or maybe it's just that we've gotten used to it. I know I have stopped complaining about high prices, especially those of food. Just learning to deal with it like everybody else. If you can afford a 15-year mortgage, you might be able to snag even a better rate. Bottom line, when it comes to mortgage rates, everyone agrees that we will not see rates in the 3 to 4% for a long, long time. So let's just get used to it and stop beating yourself up if you didn't buy a home when the rates were low, because those days are gone and we just have to deal with the new reality. Greg McBride, Chief Financial Analyst at Bankrate, explains, I think we could be surprised at how much mortgage rates pull back this year. But we're not going back to 3% anytime soon, because inflation is not going back to 2% anytime soon. So stop waiting until 3 or 4% comes around again, people. That was a once in a lifetime thing. If you didn't take advantage of it then, stop beating yourself up, because at least now with the rates higher, you will have a better chance to get a home. Remember last year with those 3% rates, how many offers over the asking price they were placed on homes? Believe me, settling down to this range is much better for everyone, because you now have a chance to get a home. As the experts say, marry the house and date the rates. It's working for a lot of home buyers right now, so don't let the talk of higher rates put you off. It is what it is, and we need to adjust our budgets and mindset accordingly, or we will miss out on the long-term benefits of home ownership. As Napoleon Hill said in the quote above, don't listen to your well-meaning friends who tell you that you're crazy to buy a house right now. The rates are too high, the prices are too high, especially those people that might live in apartments and have no inclination to own their own home. You do what's best for your family. So we've looked at the mortgage rates. What about prices? Across the nation, home prices have dipped somewhat, especially in those areas where the prices shot up astronomically. Here in New York City and Brooklyn, that was not one of those places. Yes, we saw houses go up, but overall it was just what the market can bear. I think many buyers are now able to secure a home without going way over the asking price. A big shift from the past couple of years when we saw prices going for hundreds of thousands more than the original asking price. This has encouraged many homeowners back into the marketplace. Overall, there will be more homes for sale. Homes will take slightly longer to sell, and buyers will not face the extreme competition that was commonplace over the past 2 years. However, affordability challenges prevent 2023 from being a spectacular year for buyers. especially as buyers are forced with coming up with more money to pay down due to the higher rates. Some experts think the prices are going to soften until the end of the year. So buyers might want to act sooner rather than later. The pent-up demand is making for a very strong springtime rush, as we can see already. Inventory is decreased all over the country, especially here in the city. Brooklyn, there are not a lot of homes on the market for sale. So universally, don't look for a lot of things to be on a fire sale. This chart gives a closer look at the active monthly listings across the country. As you can see, NAR is projecting just 726,000 homes for sale, which is way below the 1 million active listings that we had on the market back in 2018 and 2019. You know something, folks? All I want is to be able to find a decent priced home for my many home buyers. I don't even want a fantastic sale, just a decent priced home that buyers will be able to purchase. This year is not going to get any easier between the higher rents and the ongoing inflation, which is really eating into a lot of people's savings. Okay, so people that have been saving are finding it difficult to maintain the savings rate because the prices keep going up. You know, there was a survey done recently of renters that are not planning to buy a home within the next 12 months, and nearly half of them, 44.4%, said it was because they did not have enough money saved for a down payment. This is a shame, you know, it's really a shame. How can you prepare? Definitely now is the time to buckle down and try to beef up your savings. Check out my video here, house hacking Jamaican style, and that might give you a couple of tips and how we bought houses in the past. Listen, just be prepared for what's going on in the marketplace. That's my best advice for you. Watch your expenses and be ready to move when the right home comes along. So many of us are really picky. I have noticed that here in Brooklyn, the well-priced homes with good value get sold very quickly to the buyer who is ready and prepared to make a move. Keep your goals front and center. Remember that for most of us, owning a home is not just a place to live, but it is a major investment vehicle and something that contributes long-term to our family's overall wealth. Check out this chart. It's very interesting. The largest part of most homeowners' net worth is the equity that they have in their home. Whether their annual income is $40,000 or $400,000 per year. It's really revealing when you take a look at it. In a nutshell, home equity does more to build the average household wealth than anything else. Since your housing wealth gains are built up through price appreciation and paying down your mortgage, the sooner you begin the process, the better off you're going to be in the long term. So take that into account as you try to delay your home purchases because of high rates. It's not working out, people. For home sellers, you should know that fewer buyers are expected to be shopping for a home in 2023. As we said above, high home prices and mortgage rates are causing many home shoppers to delay their purchase plans. As a result, if you're a home seller, you may be faced with longer sale times and more negotiation with buyers than we have seen in the past 2 years. That's not a bad thing, because remember, you will also be able to find a home faster once you sell your home. A lot of sellers want to sell but are just as concerned about where they're going to move to and the availability of their next home. So they want things to stabilize also. How can sellers prepare? Remember, regardless of mortgage rates and the home prices, market conditions right now are tipped somewhat in the favor of sellers. You know, it's a matter of supply and demand. So you can have success in this market, sellers, as long as you approach the sale with reasonable expectations that are different from what was the normal, for the past year or so. Now see more seller contingencies on appraisal, financing, home inspection, and even closing costs. Yes, it is now back to more of a normal market, which I think is a good thing for everybody. Buyers' budgets are stretched to the max, and sellers who understand this and help the buyer get a move-in ready home will have an edge when it comes to getting their home sold fast and for the highest possible price. So take that into account. Let's look at the foreclosure situation. You know, when you talk about crashes, everybody's thinking there's going to be a fire sale and a zillion foreclosures available. And if you listen to those talking head videos that are mostly clickbait, you think that the sky is falling in. Let's listen once again to what the experts have to say. Bottom line, there will be an increase in foreclosures over the next year from record low levels of the past couple of years, but there will not be a huge inventory of distressed sales as happened following the housing bubble back in 2008, when distressed sellers during the housing bust led to a cascade of price declines. As you can see, that is not happening at this time. Look at the chart. NAR's housing supply is much more lower in 2007 than it was in 2010. And the amount of equity for homeowners is at an all-time high. So owners in distress do have the option of selling instead of going into foreclosure. This chart shows where foreclosures will be greater than last year, but nowhere near as high as people predict. Overall, the real estate market is a lot stronger than what a lot of the headlines would imply. With media painting a certain picture, many would think that the worst is about to happen and put all their real estate plans on hold. Listen, as I told you before, while people are giving these doom and gloom explanations about the impending crash, they are buying up homes left and right. In fact, NAR predicts that this year will be the third highest market volume of sales for the number of real estate transactions overall. Third highest year for the number of real estate transactions. Think about this, people. People are buying and sell homes every single day. So stop looking at the headlines. No matter what challenges are presented to us, the bottom line is that people need to live somewhere. That fact never changes. So make your plans based on your family needs and goals and stop trying to time the market. Remember my video I just did here? You can check it out for more on this subject. If you are thinking about making any moves or have any questions or need a deep analysis based on your personal situation, reach out to me and let me know. I'm here to help. Till the next time.